Hey guys, it's Farnu Finance here, and as promised, I'm bringing you a more complicated example on how to work out your income tax. Let's start with employment income. Let's assume that it's at 60,000 for this example. Let's say, and on that employment income, there's pay as you earn already incurred of 9,000. Let's say property income, so rental income or from income from rent is for the year, let's say 5,000. Let's say there's dividend income of, let's say, 3,000 that this person receives. And then finally, let's say bank interest of £1,000. So this is our example. Right, so the best way to tackle this sort of problem or this sort of situation is using an income tax pro forma. So as you saw in my first video on income tax, I used the headings of non-savings, savings and dividend, and now we're also going to add pay as you earn on the side as well. So let's see, employment income, I'm going to put as employment income, 60,000. Pay as you earn on that employee income is 9,000. So we'll just put that in there. And we'll just draw a line to separate that for us. Property income, so I just put as PI in the interest of space. And property income is 5,000. And that forms part of our non-savings income. We have dividend income, I'll put as DI, and that's 3,000, put that in the dividend column. And then we have, last but not least, bank interest, although it is the least amount. So we have bank interest, I'll put as BI, as 1,000. And then let's take a total. So total. So we have non-savings income of 65,000. We have savings income of 1,000. We have dividends income of 3,000, and pay as you earn, of course, is 9,000. Now, in more complicated examples, which I won't touch on in this one, but I'll add for completeness, is less qualifying interest. And then you have less gifts to charity. And then you have less any losses. And in this case, we'll assume that they're all nil. And therefore, our net income is just 65,000 here still, 1,000 in the savings income, and 3,000. Obviously, in sort of the more rarer circumstances, I think you have, any losses you can add and you can deduct from here, gifts to charity, on qualifying assets, and then qualifying interest it can be deducted here. But for the interest of this video, and given it's not applicable to the majority of the population, I've excluded it in this example. Now let's look at our personal allowance. So our net income in total is £69,000, and given it's less than 100,000, as we discussed in my first video on income tax, we are entitled to the full personal allowance of 12,500. So I'll put personal allowance as PA, and our full 12,500. If it can go into the first column on non-savings, we put it in the first column. And given there's no remainder, because it's covered by, because it doesn't even cover the full 65, we'll get none carried over to the savings or dividends income. Now, if you are entitled to the blind person allowance, you get an additional relief here of 2,500 roughly. And that will also be deducted here. But in this example, we're going to assume that's not the case. And if it is the case in your scenario, then you can just deduct that just here as well. Everything else remains the same. So once we take 65,000 take away 12,500, we are left with 52,500. There's none left here, so we get taxed on the full 1,000. There's none left here, so we get taxed on the full 3,000 dividends income. So this is taxable. And now, remember, in my first video, we had personal savings allowance. Personal savings allowance. And for savings income, so I'll put that for savings. Given that we have a net income of £69,000, we are in the higher rate taxpayer band. And you can refer to my first video if you're not sure what I mean by that. But that essentially means that we'll be hitting the 40% band. Therefore, our personal savings income, per the government website, you have allowed £500 of savings income at 0%. And dividends income. Remember how we said before that our full 2,000 is allowed at 0%, regardless of our net income. Cool. So bearing that in mind, let's look at our example. So 52,500 of non-savings income is taxable, and so if you remember from my video, we could just do a little graph here. We have, just to do this, we have non-savings, we have savings, and we have dividends. This is 37.5, and this is 150,000. Cool. So the first, this is at 20%, then this is at 40%, this is at 45%. So our first 37,500 gets to be taxed at 20%, and we have 52,500. So 37,500 of that will be taxed at 20%. So let's do that here. And that should come to a figure of 7,500. So now we've covered all of this. We're up to this bracket here now, up to this line here. And now anything above this, up until 150,000, is going to be taxed at 40%. So now we just need to work out the remainder. So our taxable is 52,500. We've already accounted for 37,500. So now let's work out the remainder. So we do 52,500 minus 37,500, and that's £15,000. So £15,000 will be taxed at 40% here. So this is an extra 15,000. So we do 15,000 times 40%, and that should give us a figure of 6,000. So now we've accounted for the full 52,500. We've taxed that amount. Now let's move on to the next column of savings income. And remember, we always move from left to right. So now we're already here. That is at 52,500. And remember, we move from left to right, and we have a savings income of 1,000. However, don't forget about your savings income allowance. And a higher rate taxpayer has a £500 allowance at 0%. So we'll account for that. And that leaves us with the remainder of 500. So we'll do 500, and what tax rate goes on that 500? Well, we can see from here that this is at 20%, and then this is at 40%, and it's the same as the non-savings income, that's in terms of the tax rates. And we know we're here based on our full non-savings stopping here at 52,500. So then we have 500 more, so we got 500 more slightly, and we know that this extra portion here is going to be taxed, and it's in the 40% bracket, so we will tax that at 40%. And that should give us an answer of £200. So now we've accounted for the 52,500. We've accounted for the 1,000 savings income. Now it's the 3,000 dividend income that's left, and then we're almost there. So if we move on to the dividends, we know that everyone is entitled to a £2,000 allowance at 0%. And given our dividends are 3,000, so we'll just do 2,000 at 0%. No tax on that, and everyone's happy. Now, there's still 1,000 to account for. So remember, we stopped here, given that we have 52,500 of non-savings income, then we had that 500 extra after our allowance of savings income, and now we have 1,000 extra to account for, so we move up to here. So that extra 1,000 is in this bracket, and this is 32.5%, and this rate you get from the government website, and it's the rate in place. So I believe this rate would be 7.5% if up until the basic rate band, and then it goes 32.5% in the high rate band, and it's 38.1% in the additional rate band. However, for our example, we are only hitting this 32.5% band of 1,000, so that's where we will be taxed at. And that simply comes to £325. And now we'll take the total income tax liability. So if we work out the total of 7,500 plus 6,000 plus 0 plus 200 plus 0 plus 325, we put that into the calculator and we get £14,025. Now you must be wondering, right, Farnu, where does the 9,000 pay as you earn go? Well, this is where we account for that. We've already paid 9,000. You'll see this on your monthly pay slips. You'll see a deduction of pay as you earn. So that 9,000, that will come down here in our calculation. We'll just take it off, as we've already incurred this expense and therefore we've already paid this amount, and we will take that off our figure. We'll take that off, and our remainder is £5,025 that is to be paid. So we can see our total income tax liability for the year would be £14,025 on this example that we worked here. Given that we've already paid pay as you earn throughout the year of 9,000, the remaining amount is 5,025. As always, if you have any questions on this example or any other example that you want me to go through, leave it down in the comments. I'll be more than happy to help, but hopefully this explains it to you. Thank you very much for watching, and I'll catch you another time.